On today's Hashi, I'm discussing growing optimism on the 2026 housing market, NAR's report on existing home sales, and weekly unemployment data. Today is Thursday, July 24, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut. Let me know in the live chat which market you're tuning in from. As we get into today's rundown, growing optimism 2026 housing market, always a good, fun topic to talk about. Some interesting comments here. We'll dig into them. And then we'll kind of pour some water on that fire with the existing home sales report from NAR, kind of in line with the Realtor.com mid-year report we went over yesterday. The mid-year report made adjustments to their projections for the end of the year. You can check that out always, of course, on the replay here on the YouTube channel at Now Bam. Make sure you subscribe to the notification bell so you don't miss anything. You can always hit the replay on Apple or Spotify as well. Okay. CNBC Squawk Box had a UBS Homebuilder analyst, John Lovallo, on. Haley, you have the timestamps up? I knew you did. You know, Bobby would say, "Oh, what do you mean?" And then I'd have to stall for 30. But Haley's on her game. John Lovallo breaking down what's driving builder stock momentum. So a little bit of pickup on the builder stocks. Now, to be fair, there's been a decline on some of these builder stocks. Look at quarter two Pulte numbers versus, quarter two last year or quarter two 22 versus quarter two this year. Totally different revenue generated by Pulte. It's why Bill Pulte, FHFA director on X, is getting a whole bunch of hate saying, "Hey, why do you want lower rates?" Some of these, some of these users on X don't realize he has no affiliation with the company other than, a large stockholder, but they won't even let him in the boardroom. The board hates him, even though his name's on the door. Anyways, there's a lot of confusion with kind of, hey, where, what is rates happening? What's going to happen with rates to builders if rates stay high? The data is pretty clear to me on builders. I get it. The stocks can go up and down. That's a funny thing. Wall Street's funny. But if rates stay higher for longer, they can't sustain 10 months of inventory. That number gets bigger. And that chart we've looked at before that you see layoffs in residential real estate, residential construction rather, start to ensue. And that's bad news for the greater economy. It's one of the reasons the administration is so passionate about lower rates. They got to the last key to some of these economic moves, the administration of what they can influence. The last key for the unlock is interest rates. You got the bill in, okay? You got deals happening with tariffs. You got an all-time stock market, all-time highs. Not second best, not an 8th place participation trophy on the stock market, like record highs is what's been happening. So Wall Street's pretty bullish on mergers and acquisitions. They're pretty bullish on some of these Q2 earning reports on tech companies that have been better than what was previously projected. Even some of the real estate brokerages, they're going to have better quarter two numbers than they originally thought. Right? Some of these companies have a lot of companies, and real estate's still down, 3-year real estate recession, but a lot of companies on earnings reports a little bit better than anticipated. There's a lot of momentum economically. You get rates to come down. There's a huge unlock. Let's go to UBS builder analyst John Lovallo's commentary here on Squawk Box. Let's go to the first one, Haley.
June. Joining us here at Post 9 is UBS Homebuilders analyst John Lovallo. It's great to have you back, John. Welcome.
Thanks.
Were you taken, we were trying to figure out yesterday if this was about incentives working or just people moving on with their lives at these rates. What happened yesterday?
think it's a few things, right? I think consumer confidence is beginning to improve, which will potentially bring potential buyers off of the sidelines, which is a very good thing. But just as importantly, investor sentiment is starting to improve. And I think that there's a view that this quarter will represent the last cut for the home builders. And I think as we move into 2026, there's growing optimism that the housing market is actually going to improve.
So I don't agree that consumer confidence is showing signs yet of a real increase from kind of pretty low levels of confidence, right? If you're an investor in the stock market, and that's what he talked about on his second point, there is, all-time highs, okay? And why is there all-time highs? The stock market believes that that bill that was debated that eventually got through, the big beautiful one, is going to bring a lot of liquidity, a lot of business investment. Tax breaks are in. There's going to be a lot of money flying around in 26. If interest rates move down on top of that, it's game on in year 250 for America. It's game on in 2026. Now, I don't think consumer confidence, though, on the whole, not every consumer is investing retail on the stock market. Not every, consumer right now can afford a home. I'm not certain that every consumer's confidence is going up yet. Interest rates help that the most. If we get Realtor.com's updated projection of 6.4 by the end of the year on the 30-year fixed, I think that helps. I don't think that solves all, but it certainly is workable. It's better than 6 3/4 where we're at today, and 6 3/4 is better than where we just were a couple weeks ago, which was closer to 6.9. So been bouncing around that 6 3/4 to 7 range, moved down to 6.4 by the end of the year. That provides real optimism for home buyers going into the spring market that, hey, by the spring, we could be at 6 1/4. We could be potentially getting closer to low sixes. A lot of time, a lot of hurdles we got to jump, a lot of tariffs that Jerome Powell has to become unafraid of between now and then. But we'll see. I just don't agree there with the statement that consumer confidence is up, and that's one of the reasons pushing up home builder stocks. I agree with the second one. Investors are finding more things to invest in an all-time high stock market, and they say, hey, building home builder stocks have moved down, might be an opportunity. If rates come down in 26, we'll jump on it now and get a return on investment going into 26. That's really all with that. Let's move to his next statement.
And so it's a combination of that and positioning that drove the move.
So not necessarily hopes for a relief in rates, for example.
We're not forecasting that at all. In fact, I don't think we need it. I think what we need is stabilization in rates. With this volatility, it's very difficult for the home builders to plan a business.
Disagree.
It's very difficult
you need
for
the
consumers
rates,
to make a decision on, the biggest purchase of their lives.
Right. So are they doing anything tactically regarding the makeup of a house or square footage or the amount of yard you get, anything like that will entice buyers?
I think the builders have been very creative and very reactive and responsible in how they're handling the market. They're building smaller footprints, fewer SKUs, if you will, so fewer floor plans, which just makes the build process much more efficient. And they're doing it in smaller footprints that are more affordable. And on top of that, offering financing incentives for the buyers.
Okay.
It's helping to kind of solve for that affordability.
We, of course, keep watching. I think
this has been a trend. You can go to the 211 time mark next on the capital gain conversation. But this has been a trademark for builders over the years, not just with the affordable issues that we have right now, but it's the affordability on the builder side of building materials. Okay. So materials continue to move up. Labor costs are going to move up. The regulation in order for a builder to hold property and build on property and get approvals to build on property moves up, and the cost to construct has just gotten so high that, hey, to keep a price alignment relative to where market demand is, they try to go a little bit smaller, try to, listen, people say they want a small house until they realize they don't have enough storage for all their crap. Now, we get it. We go into people's homes all the time, and it's like, what are you doing holding on to some of this stuff? But people like to collect crap, okay? I don't know. It's a human thing. I imagine back in the old cave days, there was probably hoarders there too. But there's a lot of hoarders out there. A lot of this stuff belongs in dumpsters, but that's not human nature. They go into a house, they're like, I'm not going to be able to bring all my crap. There's not enough storage. So, people want less space till they realize how less space is laid out. All right, let's go to the capital gains. His thoughts here on Trump's capital gain tax break proposal. Not sure if you heard this. I'll break it down after the commentary.
What about this idea that the president floated yesterday when he was in the taking questions with the president of the Philippines about eyeing, eliminating capital gains for selling homes? Is that possible?
Anything's possible in our world today. I think, look, anything that puts incremental dollars in the hands of the consumer is a positive. Now, whether that's reducing the SALT, or increasing the SALT deduction or tax breaks, things of that nature, anything that gives more money to the consumer makes a home purchase more palatable.
But with that, do you have any sense of how stimulative that could be for the housing market?
We haven't run the numbers yet, but yeah, clearly it could be accretive, but we don't have the numbers.
Yeah, I don't know that
so
it
what
would
about
be.
the stock?
I mean, this is a flat out guess. Not going to run a model or anything on it. I don't know that it'd be that much of a boom. The capital gain tax break proposal on, because I believe the proposal, the way Trump floated it out, was for primary residents, which you already have that after 2 years, $250 for a single and up to $500 on a married couple. So it's like if you're going to go over that amount, maybe you unlock some inventory, but that's going to certainly be at a high price point if we're talking about those numbers. If it's going to be on second homes, investment homes, huge win. That's a huge win. Okay. I might consider selling my second home. Like you just have a whole, there's a lot of people that's like, I'm not going to give that out. I'm going to get whacked in the taxes. I got equity, but it's like, I don't like the idea of sending the government a big check on my second home or my investment home or whatever, what have you. So I don't think the capital gain, because it exists up to 250, up to 500 right now on primary. The way I understand it, this was a primary, no capital gain tax on primary, and maybe they're going to do it with a 2-year window. And so that would be helpful to some people that made a decision after a year, they got to sell. And I agree with it. You should not have any capital gain tax. You should have no taxes on the sale of your primary home up to any amount. Like, I agree with that. What kind of a boom that would create towards the housing market, I'm not sure it would be all that significant. Okay. Best home builder stocks will finish there at 255, Haley, and then we're going to move into the NAR existing home sale report.
Stocks themselves, and we mentioned D.R. Horton reported, I guess, yesterday. Stocks down 15% over the last year. Obviously strong yesterday, but down today. What's the beneficiary, to the extent there is one right now, given the environment you described?
Yeah, look, I think most of the public builders are very well positioned to continue gaining share, from the public builders. They're now, the top 16 builders are about 50% of the market. So they have a lot better access to land, labor, materials, and financing. Plus, they have the balance sheets to offer, the financing buy downs for the builders. For the buyers. So I would say that the home builders in general are very well positioned. We still like the low end entry level. So that would be a D.R. Horton, as you mentioned, or Meritage Homes that reports later today.
Okay.
Finally, is immigration
there you go. This is not financial advice, but UBS home builder analyst John Lovallo bullish on home builder stocks, seeing a trend as investors try to invest into equities market that is at an all-time high, where some of the money is going, and he has reason to believe that builders are an opportunity and that investors are warming back up to home builder stocks. Doesn't relate it to interest rates. That's the only way. If I knew rates were going to move down for real next year, I'm hopeful that they will. I think that there are some reasons to believe that will come to fruition. But without that, to me, home builder stocks are kind of dead in the water. I think it's all dependent on rates. This is a rate sensitive industry. Real estate's been in a recession for 3 years because of the rates, not because of lack of desire to buy a home. And a lot of the home builders are sitting on inventory, 10 months of it, that is outside their local marketplace's median price point. And that's just the reality of where the prices are. And it's not like they're sitting on 10 months of affordable inventory. If they were, guess what? It wouldn't be 10 months of inventory. National Association of Realtors report yesterday, headlines were all over. 2.7% drop in existing home sales for June 2025. Remember, yesterday we went over Realtor.com's mid-year projections. They're updating. They said, hey, by the end of the year, we're going to come in lower than we did on existing home sales last year. We're going to come in at 4 million is the projection. And last year, 2024, we came in at 4.07 million. So a move down on existing home sales is what Realtor.com is projecting, with just a little over 5 months left in the year. National Association of Realtors, 24 hours later, has the hard data on June, and June was 2.7% down month over month on existing home sales. So we are still really moving sideways. Remember, 25 months straight of year-over-year growth on mortgage application data. 25 months straight. Yet what did Redfin report? And we went over this one yesterday. June was the highest month of cancellations. Places like Jacksonville, 1 out of 5 homes that are going pending are canceling right now. Why? When you have a lot of inventory relative to where we've been the last 5 years, not relative to the GFC, but an increase in inventory this fast in certain places like Sunbelt states, there's confusion. Buyers can wait longer. There's confusion for sellers. How much longer do I got to wait to get a better price is what a buyer might say. And that confusion doesn't end when somebody goes under contract. It only persists. Am I getting the best deal? Could I now potentially move out of this deal into another deal and get a better deal? That's what goes through the minds of a buyer. Certainly a buyer that isn't being aligned with the right education from their agent. Sales dropped 2.7% month over month to a seasonally adjusted rate of 3.93 million. So I guess the good news about our rate at 3.93 million, below the 4 million kind of line that you don't want to ever go under, is that, hey, there's room to grow to hit Realtor.com's projection, saying we're going to end the year at 4 million. No change in total existing home sales year over year. So any positive momentum like we see in mortgage applications, any positive momentum we see in pending home sales is getting canceled out by cancellations. Mortgage getting canceled out by the reality of where the rates are actually persisting. And we're seeing it all show up in the true sales data. Sales aren't going up. To my point about the builder conversation that we just listened to from Squawk Box, it is rate dependent. It's all rate dependent. These numbers don't just move up magically on existing home sales without the rate. Now, you could get there by prices moving down, and the longer the rate persists, there will be places that price pressure moves down. But remember, 40% of homeowners don't have a mortgage, don't have a gun to their head to sell. There's 1.53 million units available on total inventory. The way NAR calculates that would include the pendings. It's down 0.6% from May and June, but up 15.9% from June 2024 from 1.32 million. 4.7 months of unsold inventory is the number that we're at right now on existing. 6 months, remember, is a complete buyer's market across the country. There's already markets obviously dealing with that. A long, long ways away from early 2022 when we were at 6.5 nearly total existing home sales on the seasonally adjusted annual rate. 6.5 nearly down to 3.9 today on total existing home sales. Okay. It strikes me, and there's mostly real estate agents on here, right? It strikes me when I hear a real estate agent say, the last 3 months or the last 3 years, I've been working on this. I've been working. You look at their numbers, like the numbers are low, and they just want to blame it on the market. Well, not the numbers aren't low for everybody. There's a lot of agents getting more of that piece. I know the pie is smaller, but there's still a lot of agents full. Agents that understand cost to acquire a customer. Okay, there's still 4 million customers, nearly 8 million sides. What happens when the number shrinks? Cost to acquire a customer goes up. Don't beat up the agents in your market that have a flex contract. They're just setting the cost to acquire a customer as hey, I'll acquire more customers off that customer, right? So when the numbers shrink, you got to make that decision. How am I going to acquire the next customer? And if you're not acquiring customers, then the decision needs to be made on getting around customer acquisition in your market. Median price of existing home sales hasn't moved down yet. 435,000, highest on record. Existing home sale median price, 2% change year over year. So in line, Realtor.com said, hey, we'll get to 2.5 by the end of the year. So this is in line with that projection. Total existing home sales is non-existent for growth. Here's the Realtor Confidence Index here as of June. First-time home buyers making up 30% of sales versus 29% in June of last year. Sales to investors down 2 points to 14%. Cash sales up a point to 29%. Distressed sales up to 3% off of 2 from last year. Days on market up 5 to 27. There's some markets saying, man, I wish it was 27. Home sales by region, 46% in the South, 24% in the Midwest, 18% in the West, and 12% in the Northeast. Sales by region, by price range rather, majority of the sales still happen under 500,000. Right here and right here. That's the majority of the sales. Okay. Under 750,000, you can basically make up about 75-80% of all sales. Change in sales by price range. Million up is up 14%. 750 to a million is up 10.6% from where they were a year ago. So the buyers with money are the ones that are able to buy on an increase in those price points, as hey, the number of sales have stayed flat. Where more of the sales happened this year, they've happened in those 500 to 750, where more of the increases, remember, more of the majority of the sales are still happening under 750 by count, but by increase, this is where you've had the biggest gains, is 1,750,000 and up. Okay. There's your existing home sale report from NAR, down 2.7%. It's all rate dependent. All right. One thing that would help rates isn't going to happen, it seems. This speaks to a economy that is moving forward despite the uncertainty that Jerome Powell can't wrap his mind around. In the last week, initial claims for unemployment was down. It was to 217,000, decrease of 4,000 from the previous week. Unrevised levels of 221. 4-week moving averages back down to 224.5. Got up to in the 240s there for a couple weeks. Said, okay, this is the start of it. And nope, it's not. There's still a lot of employment in this job market. And we're not going to get a bailout here on rates from the labor market anytime soon. You want the Fed to move fast. It's really tied to the labor market more than it's tied to any threats from the administration or, Trump's not going to, he's already said he's not firing Jerome Powell. He'll make crazy statements, bold statements. According to Nick Timmeros, Wall Street Journal, Trump is going to the Federal Reserve today. This was posted yesterday on X. Only 3 presidents have ever visited the Fed. Remember, there's supposed to be a separation. FDR, when its HQ building opened in 1938. Ford, when a buddy of his became a governor. and G.W. Bush for swearing in of Ben Bernanke. Maybe this visit would be for the $2.7 billion renovation of the headquarters, which the Fed says they used their own money. Didn't know they had their own money. So this is the schedule here for the president. And 4 p.m. today, visits the Federal Reserve. Okay. We'll see. We'll see if there's any media coverage on that, or if it's closed door meeting, but that'll be interesting. Again, watch for labor more than for Trump headlines on what the Fed is going to do. Jerome Powell has shown no indication yet of having any interest in lowering the interest rate for the federal funds rate. The FOMC meets next week, 97% chance that they do nothing on both CME Group and on Poly Market, the betting market. 4.416 10 years. So that's a move up slightly from where we were over the last 24, 48 hours. 30-year came in at 6.7, up slightly off of the 6.77 from the day prior yesterday. So that's where we head into Thursday and the rest of the weekend. If you're looking for an opportunity to increase your closings here between now and the end of the year, the #1 agent community to close more deals, build your brand, generate leads, and ultimately get those closings is the BAMX community. Go to school.com/BAMX every single week. Tomorrow we'll have a new content drop, hyper-local content, blogs for your blog, email newsletters, and video scripts built in every single week. In the new drop, new this week, content drop classroom inside of school are all of our hyper local contents, as well as all of the hot sheet data each and every single day, right here inside of the hot sheet classroom. You can grab all the slides and my notes on every single show inside of BAMX in the hot sheet classroom. Go to school.com/BAMX, #1 community to close more deals today. School.com/BAMX. All right. There's by the way, that Rory Gilad interview is up on the channel here. President of Growth for Compass. My one-on-one interview with Rory is live. It's on the channel. If you want to check it out, Haley will drop a link here below. But just stay on the channel. Go to the most recent video, and that'll be up if you want to check that out. All right. Hope everybody has a great Thursday. Until next time, of course, toodaloo.